So this is the second problem for your reference. From the following trial balance of Mr. Raghu as on 31st March 2013, you are required to prepare trading and profit and loss account for the year ended 31st March 2013 and balance sheet as on that date. So in this problem they have given the trial balance uh, with debit amounts and credit amounts. So capital rupees 2 lakh, drawings rupees 5,000, stock in trade on 1st April 2012, that is opening stock, that is rupees 30,000, purchases 2 lakh 5,000, sales 3 lakh 60,000, wages 22,000, returns inwards and outwards, that is 4,000 and 5,000, carriage on purchases 9,000, power and light 2,000, discount 1,000, that is allowed, and 4,000 received, general expenses 15,000, salaries 12,000, outstanding rent 1,000, outstanding salaries 3,000, depreciation 15,000, rent 12,000, prepaid insurance 1,000, Raghu's life insurance premium 1,000, insurance 2,000, income tax paid 3,000, land and building 1 lakh, furniture 20,000, debtors and creditors 45,000 and 50,000, bills receivable and bills payable 10,000 and 9,000, cash in hand and at banks 68,000, plant and machinery 50,000. So total both debit side and credit side are rupees 6,32,000. Usually, as far as trial balance is concerned, under debit side we should take the assets and expenses. In the same way, under credit side we should take all liabilities and incomes. So adjustments they are given. Number A, depreciate land and building at 2% and plant and machinery at 10% per annum. Number B, stock destroyed by fire was rupees 2,000 and the insurance company accepted the claim partly for rupees 1,500, which means the total goods were destroyed for rupees 2,000, but they have received the claim from the insurance company for rupees 1,500. Here there is a loss of rupees 500 because 2,000 is destroyed, 1,500 is received, so that 2,000 minus 1,500, so total loss on stock destroyed was 500. Next, number C, purchases include goods worth rupees 1,000 purchased for private purpose. So this purchases which is on private purpose only, not for company's purpose. Next, number D, goods supplied by Shiva worth rupees 3,000 on credit on 31st March 2013 was not entered in the books. Whatever the goods which are supplied by Shiva for rupees 3,000 which was not entered in the books. Last adjustment, that is closing stock on 31st March 2013 rupees 42,000. Next we move on to solution for this problem. So as far as Companies Act of 2013, we are going to prepare the sole trading company's profit and loss account as well as balance sheet in vertical form. So we start with sales, that is 3,60,000. So less a return inwards. In the problem or in the trial balance they are given return inwards of rupees 4,000. So that 3,60,000 minus 4,000. So how to column 3,56,000. Next, less cost of goods sold. So we start with opening stock of rupees 30,000, which is given in the trial balance. For that we have to add purchases of rupees 2,05,000. So for that, add goods supplied by Shiva not included in the purchases. In the adjustment they were given the goods which is supplied by Shiva but which is not included in purchases. So that amount should be added to the purchases. So 2,05,000 plus 3,000, total 2,08,000 in the inner column, less goods purchased for private purposes included in purchases. In the adjustment they were given the goods worth rupees 1,000 which is purchased, so that is for private purpose and it was not included in the purchases. So that amount of rupees 1,000 should be added. So 2,08,000 minus 1,000, total 2,07,000, less return outwards. So in the problem they were given return outwards of rupees 5,000, so that should be deducted from purchases. So in the inner column, net cost of goods sold was 2,02,000. So add direct expenses which are directly involved on goods and services, that is carriage on purchases 9,000, wages 22,000, power and light 2,000. So total direct expenses were 33,000. So total 2,65,000, less closing stock of rupees 42,000. So in that stock was destroyed by fire worth rupees 2,000, that is also included. So 42,000 plus 2,000, 44,000. So 2,65,000 minus closing stock 44,000. In the outer column, cost of goods sold was 2,21,000. So that 3,56,000 is net sales minus cost of goods sold is 1,35,000. Sorry, 2,21,000. So gross profit is 1,35,000 less indirect expenses, that is salaries, general expenses, rent, insurance, discount allowed, and depreciation on machinery and depreciation on land and building. So in the problem they have given depreciation of rupees 15,000 plus depreciation on machinery is 5,000. So 15,000 plus 5,000. So 20,000 is total depreciation on machinery, and depreciation on land and building is rupees 2,000. So 20,000 plus 2,000, 22,000. Total indirect expenses 64,000. So gross profit 1,35,000 plus indirect expenses 64,000, 1,35,000 minus 64,000. So operating profit is rupees 71,000 less, add discount received. So discount of rupees 4,000 which is given in the problem. So total 75,000 less abnormal loss. I have already told the total stock destroyed was 2,000 minus claim received 1,500. So there is an abnormal loss of 500. So 75,000 minus 500. So net profit is 74,500. So this is the trading and profit and loss account in vertical form. So next we move on to balance sheet as on or as at 31st March 2013. So we divided this balance sheet into two parts. One is sources of funds and number two is applications of funds. So under the sources of funds, number one, owner's capital. So we start with opening capital of rupees 2 lakh, add net profit of rupees 74,500. So total 2,74,500, that is owner's capital less drawings. In the problem they have given drawings of rupees 5,000, income tax, individual income tax paid 3,000, purchases for private purpose 1,000, life insurance premium paid 1,000. So total drawings is rupees 10,000. So total 2,64,500 is sources of funds. Next, application of funds. So under that we start with current assets, cash in hand and cash at bank 68,000, bills receivable 10,000, debtors 45,000, amount of claim admitted by the insurance company. They have given 1,500 worth of insurance which is admitted, that is 1,500. Closing stock 42,000, prepaid insurance 1,000. So total current assets 1,67,500 less current liabilities. Out of that, bills payable 9,000, creditors 50,000. So out of that, creditors for goods supplied which is not recorded of rupees 3,000. So 50,000 minus 3,000, add 3,000, total 53,000. So this 3,000 is given in the adjustment. So outstanding rent 1,000, outstanding salary is 3,000. So total current liabilities 66,000. 1,67,500 current assets minus 66,000 current liabilities. So 1,01,500 is net assets. Next, investments are not given in the problem, so that should be nil. Next, fixed assets, under that furniture 20,000, plant and machinery inner column 50,000, less depreciation 5,000, outer column 45,000, land and buildings 1 lakh, less depreciation at 2%, so that is 2,000. So 1 lakh minus 2,000, 98,000. So total fixed assets 1,63,000. So total applications of funds 2,64,500. So both sources of funds as well as applications of funds are tallied.